So today we're talking about imbalance or FUG. So what is imbalance? So basically it's when imbalance is basically when price moves sharply and price tries to, make a pullback and feel the imbalance in that area. So basically it's an unhealthy movement in price, right? So if we look at the first example here, you would observe that price moved like this, a sharp movement in price, and then you can see that you can observe this pullback here. After price broke this level here, you'd observe that price went back to fill the orders here. So this is imbalance. This is an unhealthy movement in price. Right? So um if you look at the second example, we have one, two, and three leg move, correct? Can we spot the imbalance on this? Can you spot the imbalance here? You can see that after the drop of this move here like this, price pulled back. This is a sharp movement to the downside. Price made a pullback and did what? Tap on this unmitigated level. Price went to fill the orders here. Price continued trading to the downside. And if you observe this last candle here, you'd observe that this candle did not mitigate this um first candle high, or sorry, first candle low. So when you want to identify imbalance in forex market, for example here, observe this bearish movement. You pick out the first candle low and drag it to the second candle high. Depends on what you are seeing at the moment. Usually, imbalance involves three candlesticks. Let's use this example: one, two, and three. Right. So let me use the example here. So usually you take out the the first candle low and drag it down to the third candle high. That's in a bearish market, right? So the orders here has been filled. There's no there's no longer imbalance here anymore. But if we had something like this, a scenario where price has not tapped into this zone, we have imbalance here. So, and in the future we want price towards to rally to the downside and make a pullback and perhaps tap on the unmitigated what order block. So here we have a mitigation here. So apparently there's no imbalance here anymore. Price has filled the orders and price has um continued its rally to the downside. So moving back to this one, we have an unmitigated order block here. And I want to say something that's very important. Order blocks or identifying imbalances, what we use as entries in the forex market, right? So if after spotting or after mapping structure, we want to identify imbalance in the markets where you can take the risk for the buy and the sell, correct? So here we have an unmitigated level or unmitigated zone. This order block has not been mitigated. So what do you want to see in the future? We want to see price rally to the downside, right? And tap into this zone here, this zone, and then continue trading to the downside. Then you might want to start selling here. You might want to take a sell entry here, right? Target to 1 to 3 weeks to reward, and yeah, let's invert the scale and see. So in this example, we have a bullish scenario, correct? So here we have this movement like this: one pullback, two pullback, and then continue the continuation to the upside, right? So if you look properly, you would observe that after this move and after the break of this level here, price came back to fill the orders here. So apparently there's no imbalance already since price has taken the orders here, correct? So In the future, we want to see in the future we want to see uh price we want to see price tap into this other block and continue to rally to the upside, right? So in this example, we have this move, this rally to the upside, and then we have this pullback, and we have the break of this level here like this. Price broke above it, and then we have a retest. But you see, as you can see, okay, so in the bullish market, you mark out the first candle, the first candle high, and the third candle low. I told you it involves three candlesticks, correct? So from the first candle high, you drag it down to the third candle low, correct? So as you can see here, is there imbalance here? Actually, there's no imbalance, right? Because I want to see price tap into this zone, fulfill the orders, and continue its rally to the upside, correct? So so let's see for 1, 2, 3. Let's check if there's imbalance in this movement here. So you can see that after the pullback like this, okay, mm, after the pullback like this, one, and then pullback, you can see that price broke above this level here, right? So if we decide to pick out the first candle high like this, let's mark out this entire zone. You can see that there's imbalance here, right? There's an unhealthy movement in price here. So in the future, what you want to see? You want to see price tap into this zone, right? You can equally take a buy entry here based on single candlestick mitigation entry, right? So it's very simple to understand, guys. So on the third example here, we have this move to the upside, and then we have a retracement here, and we have price tap into this. We have this pullback tap into the first candle high, right? But if we had also have something like this, I probably it involves three candlesticks, 1, 2, and 3. You can equally have something like this, and mind you, other block or all mitigated levels in the market or zones in the market can only be used once. So if we have this candle low tap into this first candle high, then price would not usually tap here since the orders here has been filled. So this might just be like a pullback, and then you could be anticipating something like this. You could do something like this, pick out this first candle high, and drag it like this, in the sense that after price breaks out this level, you want to see a pushback. You want to see a retracement like this. After price breaks after the you want to see price. Okay, so we'll be moving on to the left charts in a minute. Okay, so observe the last selling candlestick here. You observe that uh after the close of this candle, there was a break above by this next candle here, and then um we had further breakouts of this candle. Here's the breakout, and then we have a retest of this ash candle here. We have a retest, and if you are to mark it out, you observe that from here, you mark it out, you see that price came after the breakout of this level. This candle mitigated this move here, so you can okay, it mitigated and it closed below this candlestick. So you could buy here. You can see after the retest, price further continued its rally to the upside. So moving on to the next example, if you observe the last selling candle here, you pick out the first candle high and you drag it down to the third candle low. You observe that there's no imbalance here. Why? Um why? Because the third candle low mitigated this movement. So you can see after the mitigation, price continued it rally to the upside, correct? So if you have to pick out this first candle high and the third candle low, you can see that there's no imbalance. There's imbalance here available here. So in the future, we want to see price retest back into this zone here. Let's mark it out into this zone here like this. You can see that on the retest, as you can see that on the retest, price came to what tapped this unmitigated imbalance level or imbalance zone in the market, and after price mitigated it, what happened? You can see this rally to the upside. We have same scenario here where price came to we have same scenario here. If you take out the last selling candle here, you drag it down to the left, to the right, you see that this candle mitigated this last selling candle, right? And after the mitigation, what happened? There was a rally to the upside, right? So it keeps going on and on like that. All right, so let's identify. There's no imbalance here. If you observe the last selling candle, you can see after the breakout, this candle came all the way to mitigate it, correct, and continue its rally to the upside. So let's mark this last selling candle here. You'd observe that this candle low came to mitigate it, correct, and it keeps going on and on like that. It keeps going on and on like that. So